Hello and welcome to this session in which we will discuss the difference between product cost and period cost. So the first thing I want you to know is this. Every time the company incur a cost, in other words, the company pays for something, as a company they have to determine whether that cost is an expense or whether that cost should be considered as an asset. Now the technical word is, are we going to expense it or are we going to capitalize it? Capitalize means treat the expenditure as an asset. And what does that mean? If it's an asset, it goes on the balance sheet. It will be expensed later versus being expensed now. Being expensed now, it means it's going to hit your net income today. So that's the idea of how do we treat the expenditure. Is it expense it or is it to expense it or is it to consider it as a capital asset? Under expense it, sometimes we call it revenue expenditure. It means it goes on the income statement, same term. Now, before we dive deeper into this discussion, I want you to keep this visual in mind. So I have this in two separate sections. One is a product cost, the other one is a period cost. Under the product cost, I want you to think of a merchandiser that holds inventory, like they're selling t-shirts here, they're selling handbags. Okay, what is that? That's inventory. So anything that deals with inventory, anything that's inventory costs, and we talked about inventory costs in the prior session. Anything that's related to inventory is a product, is an asset. Eventually it gets sold, it gets expensed. The other picture I want you to keep in mind, anything that deals with the production, if you are manufacturing, any production cost, because the cost to produce something, because you could either buy something or you can manufacture those t-shirts. You can buy them as final goods and resell them, or you can manufacture them. That production cost is considered also a product cost, which is an asset. So a product cost is an asset. On the other hand, when you think of period cost, think of selling and administrative. The people who are sitting in corporate office, they're responsible for running the company, like the HR, the payroll, the CEO, the CFO, the selling people who are selling the manufactured product. Those are period costs. So this is the picture I want you to keep in mind before we dive a little bit more in depth into what's a product cost, what's a period cost. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true false questions, as well as exercises. Go ahead, start your free trial today.
Starting with the product cost, as I mentioned, any cost that's inventoriable. It means it's attached to the inventory, it's attached to the asset, and we talked about those. Like what? Any cost to bring the asset to a saleable condition, to bring the inventory to a saleable condition. Like what specifically? Like the purchase price, the freight in, the transportation, if you have to pay taxes, if you have to pay insurance in transit, if you have to pay processing costs, which is a packaging cost. All of those are inventoriable costs. They are considered product cost. Now that this is if we are a merchandisers. What happens if we are a manufacturers? If we are a manufacturing company, we are going to incur direct labor that work on the product, that touch the product, manufacture the product. We are going to need direct material to manufacture the vehicle. We need tires, we need computer system, we need sensors. Those are direct materials. We need to incur other costs other than direct material, direct labor in the production department. We need a supervisor that supervises the process. We need someone that clean the manufacturing plant, janitors. Those are working in the production process, but they're not working on the product. We need to rent the building where we are. We need to depreciate the asset that we are using. the production, the manufacturing facility will have fixed asset, will need to be depreciated. We need to pay certain taxes. We have payroll for other than direct labor, for supervisors, for people who are not working directly on the product, but they are within that building, within that manufacturing facility. All of those are considered product cost, and as a result, they are listed on the balance sheet, and they will be expensed later as part of cost of goods sold. Later, they will be expensed once they are sold, and this is where we have a true example, a classic example of the matching principle, where we're matching the cost to the sale. So once the sale occurs, the cost will follow in terms of cost of goods sold. That's when it comes to product cost. When it comes to a period cost is cost that's not directly related to the acquisition of inventory or the production of inventory. So we're going to incur other costs to run the company, but those costs has nothing to do with acquiring the inventory, or if you are a manufacturing company, manufacturing the inventory. Okay, great. What do we do with those costs? We will expense them. Like what? Selling and administrative expenses. Those are the two main costs that we have to expense because we have to move on. They're not related to the inventory. We need to incur them in order to run the company. So let's start with selling expenses. Selling expenses are what? It's whole category. Selling expenses are expenses incurred to sell the product. The company will have a selling team. The company will have to advertise. The company will have to pay shipping cost. Those are selling expenses. Let's be more specific. We have something called freight out. And remember, every time I mention freight in, I tell you freight out is treated differently. Freight in is an asset because to buy the product, it becomes part of the product. Freight out is an expense. To sell the product, you have to incur a freight out, a transportation expense. Is an expense. Advertising. When you want to sell the product, you might have to advertise it. Advertising is a selling expense and it's a period cost. It gets expensed. Salaries to sales team. So notice here we have payroll and here we have payroll. The payroll under the production department is people who are working in production. You also have to pay the sales team, but these individuals are selling. They are treated differently. One is expense, the other one is capitalized. Let's take a look at this multiple choice question to illustrate this concept. All the listed costs are inventoriable except for what? Inventoriable, it means it's an asset. It's treated as inventory. So we have 3 yes as assets and 1 is a no. So let's try to eliminate the yeses because there's 3 of them. Let's go ahead and do that. The cost associated with transferring goods to the location of the manufacturers or producer. Well, the cost of transferring goods to the location of the manufacturers or producer, that's freight in, because that's the cost of transferring it to somebody who wants to manufacture it or produce it. They have to pay for it. Therefore, it's part of their cost. Therefore, it's an asset. Therefore, it's out because we're looking for except for a cost that's inventoriable. The cost associated with transferring goods into finished saleable product. Again, this is part of internal processing. You're moving the assets from one place to the other. Therefore, it's part of the asset. It's out. C, the selling cost incurred by the sales department. This is selling. Hold on a second. Selling is a selling cost, not inventory. You sell the product after you have inventory it, after you have produced it. Therefore, between A, B, and C, C, it looks like the one that's except, but let's make sure. D, the cost associated with buying raw material that are used in the production. Well, this is pre-manufacturing. It's not even manufacturing. Therefore, it's inventoriable. Therefore, it's a period cost. So the answer is C as in Charlie. Good question. What should you do? You want to go to Farhat Lectures, look at additional resources, multiple choice true false lectures. That's going to help you tremendously in this topic, whether you are a student, a CPA exam candidate, CMA, or studying for any other professional certification. The best investment you can make is invest in yourself. Good luck, study hard, and of course, stay safe.